Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. We're gradually entering in the pre-Christmas trading week. So as usual in this report, in our week report, we have considered major fundamental background for euro currency. Mostly the factors are the same. There's Brexit, vaccination, virus, stimulus, and all this stuff. Some factors have minor shifts compared to previous week, others have greater changes, and we have tried to come to some conclusion on the current events and make some forecast, make some anticipation on market in the nearest perspective. So in general, in 2 words speaking, we still confirm our medium-term bullish view on the euro currency, keep untouched the same target around 128, 130 within a few months. Probably it will be hit. So following some briefly on the major driving factors, the big shift in expectations now stand with the Brexit topic. So you could see it probably by the market reaction, especially on the performance of the Great British Pound this week. And even just on the last week we have discussed how everything stands bad. It was related on the markets and options market to the Great Britain currency. It was in the politicians' rhetoric, but currently the situation has changed, and somehow, guys, I'm trusting more to the international banks rather than the politicians. In all international banks, we have put the analysis in the report. All of them tell, so including Citibank, Goldman Sachs, UBS, ING, so all banks suggest that agreement will be achieved. Maybe it will not be as perfect as everybody suggests. Maybe some topics will be out for the later discussions, such as the fishery, for example. But agreement should be achieved. And all of them suggest positive performance on the Great British Pound within the few months. So personally, I think that it really might be true, because actually, guys, fishery, if you'll take a look at it as a sticking point, you will see that fishery actually takes less than the 1 decimal part of the gross domestic product, valued approximately £1 billion. It's nothing compared to the Great British economy. And fishery looks like the struggle flag more than some really valuable economical factors. It means that neither Great Britain nor European Union prefer to take the big risk of collapse of the national economies, since the 50% of the import and export of both economies will be stuck with the new custom rules, taxation, and so on, just to resolve the fishery problem. So this is just nonsense. And from that standpoint, probably we should be prepared for positive dynamic on the Great British Pound. There are other reasons exist why the Great British Pound should show good performance. Personally, I think that it could reach within a few months 144, 145 area, particularly because, as you know, the Bank of England keeps more strict rules compared to all other central banks, and that makes Great British Pound more valuable from that standpoint. Second, the stock market in Great Britain looks undervalued compared to other markets, and that is the first place where all bargain hunters will run into as soon as the uncertainty around Brexit will be resolved. From that standpoint, we think that the Great British Pound could get the good performance. But everything you could read in the report. Now, speaking on the technical moment, on the common week, we mostly will be, in the beginning of the week, we need to understand when there will be some reaction on the targets that have been achieved on Friday and on Thursday. So because this is XOP on the daily chart, This is 127 extension of the 1618 extension of the most recent retracement on this drop, so that's potentially could become the butterfly. And theoretically, market still could show the reaction on these targets. Currently, by the performance that we have, it seems that most probable type of reaction market could form. As you can see, this is evening star pattern. To complete it, market needs to show on Monday the collapse approximately on 100 pips back to the 122, 2180 area, somewhere in this level. In this case, it could be nice sell-off that complete the pattern and supports the idea of the deep retracement. For retracement, we consider only two levels. The first is 121.40, nearest fib levels. Then here it's also the confluence, if you will see on the intraday charts. And next is a large, wide envelope around previous top. It's 120 area because it has the levels as above as below. So in general, it creates the wide confluence support accompanied with the daily average result. Other levels that stands below it were not interesting because all of them stand below the daily average result, and that is two levels that could be reached. Although we think that could be actual chance stands more for not as deep retracement as back to the 120, but some smaller retracement could be formed. So that's the major question that we need to answer on. For that purpose, we also need to take a look at the follow time frame chart. Take a look that our XOP targets 122.73 barely has been tested. And it means that market could show some flirting action around this top, but it is crucial for the price to stay below 122.80, 122.85, so not too far from the targets. Why? Because if indeed some pullback will happen, market should not show any significant breakout of this level, because all targets already has been hit. If market intends to show reaction on this target, it should not go too far above these levels. So 22.75, 22.80 is acceptable. Move above the 22.85, 22.90, that will be the point that market intends to continue upward action immediately. Our next target stands 124.50 on the weekly chart. So, and it opens a lot of different scenarios that you could consider depending on your view on the market. If, for example, if you would like to buy and you suggest that retracement will happen, in this case you could apply two things. First, you are just waiting for pullback, so forming how bearish patterns will be formed on the lower time frames. If market will start downward action back to 21.80 area, completion of this drop, and maybe some pattern will be formed. You just do nothing, and at the same time you could place stop buy order around 22.90, 23 area. Why? Because if market starts acceleration, it will be no pullback, and you will enter the trade by the stop buy order on the moment of the upward action and breakout for the targets that we have currently on the market. Correspondingly, if you have the bearish view, you need to consider drop your time frame and watch for bearish reversal patterns around this area, waiting when they will be formed, then place the stop above this pattern and take the short position with the possible targets based on the patterns that will be formed. So that's actually two moments that we need to consider. Take a look here. We have also divergence on the MACD that potentially shows the alternative deep retracement scenario in case if it will be the hand and shoulders. For example, it could be draw back to the 121, this pullback, and then deeper, greater ABCD retracement. That's also possible, but that is far standing perspective. Currently, we're not considering. Now we need to understand what will happen around this area. So that's what we'll keep an eye on Monday.